My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, Bob Mortgage Nation? This is the 74th episode of the Mortgage Report. That's right, 74 weeks of me coming to you delivering market-related news that's impacting interest rates, okay? We talk about a lot of different things here. We talk about the bond market, we talk about economic market-related news and how that's all shaping mortgage rates. So let's talk about what's happening this week, because this is a big news week. We have the Fed meeting on Wednesday. What are we expecting the Fed to do? We're expecting them to raise interest rates. It's almost like take it to the bank certain that they're going to go ahead and raise the Fed funds rate, and we're thinking about 25 basis points. Now, don't freak out as it relates to mortgage rates, okay? What we've seen typically with trends, every time the Fed is increasing the Fed funds rate, it's actually benefiting mortgage rates, and here's why. We start pricing in these interest rates well in advance of the actual Fed delivery of that Fed fund increase. So what I'm more concerned about, and I watch, and the market watches as well, is the market-related news leading up to and out of that interest rate decision. So what's going to be really important is Fed Chair Jerome Powell's comments after that meeting, and that's really going to be what sets the tone for interest rates. Later in this week, we also have the Fed's favorite measure of inflation, which is the PCE. That inflation read, that data is going to really kind of also help drive which way interest rates are going to go. We also have some just housing data. CoreLogic, National Association of Home Builders is going to be releasing some information. We have home sales and pending home sales numbers. Those really shouldn't be market-moving data that's coming out, but it's going to be important to someone like myself and how I report that news to you guys. So let's start taking a look at some of the data right now in my charts. If you look, we're sitting right now at 100.84 basis points on the Fannie Mae 30-year 4% chart. Now, we're down, that puts us down here, okay? This is a 3-year chart, right? This goes all the way back to, if we look at this, to basically August of 2013. We have not been that low since August of 2013. Matter of fact, we have not been that low since 2010. Okay, so if we just look at the last quarter, you can start to see here in September what started to happen, and we were really dropping. Bonds have been dropping, and now yesterday we were just right at the ceiling of resistance at 100.797 mark, and today we are closing right above that, 100.84. So bottom line, guys, with us closing just above that ceiling of resistance, which now becomes a floor of support, I'm going to go into this week carefully floating. Okay, we have a big room to run. If we go back to the charts really quick, you can see if we're right here, we have a big run up to that next ceiling of resistance. So if we come out of Wednesday with some really good favorable market news from Fed Chair Jerome Powell, that could carry us and provide a bond price increase, which that means interest rates are going to be decreasing then at that point. So look, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families. I watch the markets daily to make sure I could deliver to you the right home loan at the right price. Look, give me a call. Bob Mortgage, your dream loan is already within your reach.